Hey guys, welcome back to SB Capital. As always, we're super excited to have you guys here join us today. We hope you guys are enjoying our video so far. Our last video was about Facebook, and if you followed it, you would have definitely made a lot of money off of it. We talked about Facebook and the news that was going on behind it, and we talked about how we could trade it, the price levels, posted everything. If you followed it, you would have made a lot of money. Today's video, we're not talking about trading specifically. We will be talking about investing. At SB Capital, we care about how we could make money, and we try to share that education out to you guys. All right. We hope you guys stay subscribed, have your alerts on, and try to follow with us as much as you can, because I promise you we're giving you a lot of information that is 100% useful. So let's dive straight into it. I'm going to show you guys a slideshow. I'm going to talk a little bit about today's topic. Let's get straight into it. All right, guys. So the first thing we're going to talk about is interest rates. The Federal Reserve has decided that interest rates will remain near 0% until at least 2023. This was reasserted by Jerome Powell during the FOMC, which was on Thursday. Basically, if you guys don't know what the FOMC is, or what they do in the FOMC, is basically the Federal Reserve talking about their outlook on the economy and the markets and what needs help, and it is basically what they think about, right? And it's very important because they're the Federal Reserve. The Federal Reserve did this in response to the catastrophic aftermath of the coronavirus meltdown. They did this to promote spending, not only at the retail level, which includes all of us, but also for big firms and banks. Why does this matter to us? Well, in our economy, the way anybody makes money is through circulation. As long as there is money circulating, there is money to be made. Coronavirus has taken a tremendous toll on our economy, wiping out jobs, affecting consumer spending, and various other key components of the economy were affected. Coronavirus directly halted the circulation of money, and the US economy and markets were failing quickly. Low interest rates is a great tool to promote the circle of money. Low interest rates is a great tool to promote the circulation of money quickly. Banks are able to borrow money from the feds for very low rates, which in turn means everyone under the banks have access to loans with low rates. Although this may sound great, bonds, CDs, and saving accounts will suffer because of this. Because the broad interest rates have dropped, people who usually make money from APYs will no longer boast those gains. Assets based on APY returns are not very appealing right now, and will remain unappealing until interest rates start climbing back up again. So for the people that have thousands of dollars laying around, they're wondering, what should I do with the money I have? Very simple. Buy property. Don't buy stocks, don't buy bonds, don't buy any of that. Buy property. Why should I buy property? There are many reasons why property is a great asset, if not the very best asset for anyone to have. Very few times in our lifetime will we have access to low interest rates. The banks and lenders are always ready to suck out as much money as they can from customers, so take advantage when you can. Of all types of equities and assets available to invest into, property has of the highest intrinsic value. For those that don't know what intrinsic value is the property of anything which is valuable on its own, without considering any other factors. An example, time. What is the value of this asset? Property will always have a high intrinsic value because land is not useless. No matter what, it can always be used for something, whether it be a home, a store, a mall. The land is always useful, which gives it permanent value, right? So when you're looking to invest a ton of money, you want to invest into something that has high intrinsic value, that will have value today, that will have value tomorrow, without considering other factors, right? That's 50% of risk reward, right? You investing into something that's not risky. This is a safe asset, and that's important because wherever the bulk of your cash is, you don't want to throw that money into something that has very high risk. It's not worth it. Put it into something that has low risk but will generate returns. It is an asset. only look to invest into real estate if you can afford it and if you qualify for it. All right? Unless you have the cash to buy out property, completely buy out property, you have no choice but to take out a loan. And if you cannot make those monthly payments, the bank will make sure to take away your property and whatever remaining assets you have left, and you will go bankrupt. If you're looking to buy property, always have cash in hand for a suitable down payment and have at least double that amount to make sure you have money in case black swan events take place and you need cash in hand. You don't want to throw away all your money into one thing. You always have to make sure that you have extra money set aside, not just a little bit. You need double the amount you're willing to spend. And more important than that, because this is even more important, and these are some final points to just wrap it up. The interest rates will be low until 2023, at least until 2023. So if you do not have the money to invest into property today, do not assume this is the end. Save up as much money as possible, and luckily we have a deadline to follow. We have at least another 2 to 3 years to be able to, like, that's a peace of mind that, okay, at least interest rates will be low for another 2 to 3 years. So within this time, make sure that you secure your funds and manage your debt properly. Pay off any credit card debt. Take on new debts if you can afford it. An example, you buy a car because interest rates are low. If you want to buy a car, if you could afford to buy a car, buy it now. You pay low interest rates on it, and banks will like that. They want to see activity on your credit report. They want to see that you could borrow money and you're able to give that borrowed money back. It's very important to show lenders that you're a worthy customer. And for those that are wondering, I already have a house. What would I do with another one? Well, I already have property. What am I going to do with another one? Rent it out. Lease it out. Make something on it. Having property is already an asset. When you own the property, it is an asset. That's yours. But there are ways to make an asset return royalties. How would you do that? You have your own house. You decided to buy another house. Rent that house out. Rent that house out, and you could use that rental money to pay off your mortgage and then pocket some money on your own, right? That way, the house will on its own pay for its mortgage. So in its own way, it's paying for the asset and you're taking some money home. And the final part is, which this is the most important part in this slide, because the problem is the reason why most people cannot take out mortgages is because they do not have the money up front to put down in a down payment. Mortgage and rent is usually about the same, right? Depending on where you live and the type of house and whatnot. But a normal 3-bedroom house in, let's say, New York City, Queens, if you want to rent it, it'd be $2,000. If you want to put a mortgage on it, it'll still be around $2,000. It's just you have to put up the nice down payment amount. But do not lose faith, because there are solutions to this, okay? You could get a regular mortgage for under 20% down payment. But because of that, you would have to either pay mortgage insurance, or you'd have to pay a little bit higher interest rates. But you do get your very own property, which is your very own asset. If you manage to pay it off, that is yours. So taking the hit on a little higher interest rate right now is not really a hit, because interest rates are low in general. So if you do not have the full 20%, if you have enough money to put down the 10%, put down the 10%, take the hit on whether it be the mortgage insurance or the interest rate, but you have your own property, because the interest rate right now, suppose that you do put down 10%, your interest rate more than likely will be less than somebody that put down 20% a year or 2 years ago, right? So it's not really a hit. You're still getting a good deal, and you're getting an asset out of it. You're not losing money at the end of the day. You're still getting an asset, and that is 100% worth it. All right, guys, that's all for today. Really hope you guys, were able to take something out of this. It's very important that you guys educate yourself in financial literacy, because nobody else will. All right, and we try to give you as much information and quality information as possible. So please subscribe to us, put your alerts on, share us. It'll be worth your time, and I promise it. I hope you guys have a good day. And until next time, stay safe, stay healthy, and stay getting those tendies.